posed by a second virus wave and the outlook for a slow labor market recovery from the Fed, which was reinforced by Thursday morning's weekly number of new filings for unemployment benefits, which remain well over a million. This week, Fed Chair Powell testifies before the Senate on Tuesday and the House.
Map this morning, so let me pull that up for you. I think what I noted this morning, news-wise, on the overseas basis, was that the British retail sales number came in nice and high too. So they got a nice retail sales boost, similar to the boost that we got.
Yeah, absolutely. They were up 12% month over month versus a drop of 18.1% for the prior month. Looks like you can tell, look at the heat map, what's going on, and it looks like it's the reopening trade once again. Rally started overseas as China said it's going to step up its purchases of U.S. agricultural products. You can see a little green on soybeans there, corn, hogs, which started all markets going up a bit. In Asia, markets actually closed quite a bit higher. China was up 1%, India up 1.4, Hong Kong up 0.7 and 0.6. Also, European markets are up nicely as the EU summit today is apparently making progress, but an EU recovery fund, which approved would make for a stronger fiscal union over there. You already mentioned the retail sales domestically. Really nothing today. The only data is Q1 account balance data, which the market will forget, I'm sure. Yeah, there's a lot of Fed speakers today, though, so maybe keep your eye on that. As far as the market, expect a busy day today. It is quadruple witching day, and there's $1.8 trillion in S&P 500 options. That's the notional value of the all the options on the S&P. Not the premium, but how much stock they're controlling. So probably a lot of activity, a lot of volume,
perhaps.
Yeah, volume. Look at round numbers towards the close, and if you're interested, the Dow has been up 10 of the last 17 times, but we're already up today. So there you go. We can do stocks in the news.
Let's do it. Where to begin, Lee?
All right, let's look at some Chinese retail stocks. As you might know, there are two main shopping events in China. The first is 618, which was just, June 18th, but that was started by JD.com. And the other major one is Singles Day on November 11th, which was created by Alibaba. Now, of course, they both have deals on both days. So the results came in. Between both of them, they had a record 136.51 billion in sales on June 18th. Crazy. So let's just take a look at Alibaba, BABA.
Sure. I thought, okay.
Up a little, at least it didn't go down. I didn't see what the estimates for those sales were, but they sold $98 billion worth of inventory during the event. And JD.com, that's JD.
I did have it right. I misread the symbol up here, but it's a nice looking chart too, Lee.
Yeah, they sold looks like 38 billion in goods. So where's the 10-day on that one?
Right on it. Pretty interesting.
Yeah, well, there you got to pull back to a reasonable support level if you want to join the trend. We should have one day which went under it, but recover that right away. We got a question already on what is quadruple witching day. Let's look at it. So there's 4 things expiring. Options on single stocks, 1. Options on indices, 2. Index futures, 3. And options on futures, 4. That's the quadruple witch.
Yeah. So busy in just about every area that you might be looking.
Yeah.
Okay. All right, Lee.
Okay, in the oil patch, let's look at Occidental.
Okay.
They were on a tear, at least in the. Yeah, so have looks like they pulled back.
Yeah, to the 20-day here pretty nicely.
Yeah, came back up. Yeah, I think you got it right there, right there. And they're up today. Um, SunTrust upgraded the company to buy from home, and the analyst over there put his target at $25. His previous target was 13. And what he said was, we believe Occidental is in a position to continue improving its balance sheet through internal and external means. So it's probably help for the XLE. We'll take a look at that later. But
Yes, we will.
where's the 10-day on that one?
Holding right now, but doesn't seem as solid as the 20 has been, maybe.
Yeah, I think the 20 is better on that one. Or just the stop under the previous resistance area, which should act as support.
Okay.
All right. Oh, DraftKings, you like these guys.
When
DK
there's
and J.
sports, I love them. Yeah.
Yeah. So anyway, they used the run up in their stock to price 40 million shares at $40 per share, with Goldman Sachs and Credit Suisse being the underwriters. So getting a lot more liquidity there. It would dilute the shareholders a little bit, but still looks pretty good. You got the levels in there, the
Yeah.
20 or the green line.
It's always tough, when the position begins to trade and you don't have a lot of history on the chart. You try to decipher where your levels are. And I think this $35 range here is a pretty important one. You can see the price action in this week here that went, we had a couple of tests along this level here. I think this is an area where traders who've been long would probably, lighten up a position if it got below this level.
Yeah. So follow-up question on quadruple, which what it all means. It usually means increased volume. So if you're using volume studies on a stock, sometimes you want to, um, put that one aside. It also means often that towards the close, if you are close to a round number on the S&P 500, that you tend to peg near that round number. I think from a trading perspective, that's about the most you can say. Increase volume, and later in the day, if you were at, I don't know, 31.62, and maybe they bring it down to 31.50, or if you're closer to 3,200, let's say you were at 31.78, then they're probably going to push it up to 3,200. So that's the only other trading thing I can think of, other than, again, volatility and volume. So you just got to keep that in mind when you're looking at charts.
But it's not always easy to, you can keep it in mind and you can look at it, and then it doesn't always work out that way. That's for sure.
Right.
I always take it to mean just a bit more volatility more than anything else. Today tends to be a little more crazy.
Yeah. Disney.
Yeah. Speaking of reopening trade, huh?
Yeah. Well, I'll give you the news. But looking at the chart, we got a little resistance up there.
Yeah, looks like a yawn right now, though.
Yeah. So anyway, an analyst at Wells Fargo shows you. Well, I don't know what analysts get paid for. He set his target to 118 when the stock is at 119.
Okay. All right.
He maintained his equal weight rating on the stock. But anyway, he said they remain more pessimistic than most on the potential length and depth of the coronavirus pandemic, and its impact on park operations and their studio production. So kind of threw a little wet blanket on there. So what does he think? Because of all that, it's going to go down $1. I mean,
I don't know. That seems like an interesting decision to come out with that commentary. I'll put a support line right here near the 50-day. I think that's the level. Notice the uptrend line I've got in here. I hear you, dog. Excuse me. We've got a nice uptrend in place here, but supporting it along the 50 days. So a bit of confluence here around 112. I think that's an important level to keep an eye on.
yeah, upside target would be another test of the 200-day there.
That's at 127 approximately. So
A little bit over his target.
a little bit. You're right in the middle of it on a one-to-one risk to reward ratio, unfortunately. So you need to find a better entry if you think you want to go long. You need to find a better entry if you think you want to go short, at least to set this up in the way that traders might want to do so in an ideal fashion.
Yeah. All right, Penn National Gaming, PENN.
All right.
A nice move here. They said they have resumed operation in 30 of the 41 properties they manage. So again, part of the reopening trade here.
Yeah, it looks like a nice little consolidation up here too. It's not moving a whole lot once it got up here, so you could say it's run to some resistance, but it's also kind of consolidating by time as it resides in this upper level, isn't it?
Yeah, I think key level in the very short term are those two matching lows about a week ago.
Yeah, I think so too. Right here.
Yep.
I'll even put a line in there. We can look at this later.
Yeah,
Okay.
Notice how those lows are right at the highs before the last breakout.
Yeah,
at the
back
beginning of
here.
the year. Yeah.
Yeah.
All right.
Alright.
Spotify.
Well, the podcast game is strong.
Yeah,
Wow.
we talked about that one.
Just yesterday.
Yeah, that's right. Yesterday, up again. So another price target set here at Rosenblatt Securities. Set the target at 275. That's a raise from 190. They also raised their 2021 revenue forecast. And just like we were saying, a lot of it's due to their podcast, like you had mentioned, with Joe Rogan and Kim Kardashian. I don't know if they'll be on the same one. Keeping up with Spotify.
That's right. Boy,
Okie
at this point, Lee, I'm sure people are wondering what do I do with this now? I mean, if I haven't gotten shares as of yet, how do I look at this and can I get long? And I think we always say the same thing, don't we? You can always take a little bit, I guess, own a little and see what happens. Ideally, you get a little consolidation through time and allow things to catch up. But it's going to take some time. It looks like that 10-day is way down here at 190. 196.5. So we're 43 points away from reaching the 10-day even. So just to find short-term support could be tricky.
Yes.
Sometimes you just gotta. Our buddy Lou Mercer likes to say, sometimes when you're looking at a chart, you gotta, if you want to own it, you just gotta buy a little and plug your nose.
That's right. All right. CarMax, KMX.
AMX. Got it.
Yeah, a little bit of they were up earlier, a little bit of sell the news here. They had a quarterly revenue that beat expectations. And so their comparable sales fell 41% on a year-over-year basis.
Yeah, that makes
That
some
was still
sense.
better than it's still better than consensus looking for a 51% decline. So
It is giving you a bear engulfing candle though today at this point, Lee. So it's something to keep a close eye on.
right.
Matching highs in the last 2 weeks, and then the bear engulfing candle today with a breakdown in the RSI as well.
Yeah,
I think,
divergence on the RSI was So
yeah, I
you
think
want
it's
to
a
watch
little
where this one
difficult.
settles. Yeah. some support if you like it.
Agreed. Yeah.
Okay. Novavax, that's NVAX.
That's been on a tear.
Yes, it has.
Look at that.
Yeah, what's the measured move out of that triangle? Have we met it yet?
Well, drawing it in, let's see. That's about 36 to 61. Call that 25 if my math is right, Lee. And then from the breakout point, right about here. Would you agree?
Yeah.
So 25 plus 53 puts you up around 78 as an approximation.
Yeah.
The one standout here, Lee, look at that on balance volume.
Yeah.
Really nice level held here as it was consolidating. This looks pretty
Yeah.
interesting.
We'll have to watch the RSI. It's a little less, but it's still over 70.
Right.
So you can't, divergences usually that second high, if it's under the overbought level, is more of a tell than when they're over 70 and you have a divergence. Okay, anyway, the news was recent additions to the well-known and established leadership team there. They brought in some more people, and they said at Cantor Fitzgerald, they raised their target to 88 from 45.
Okay.
All right. Let's see. Apple. Maybe people have heard of that one.
Yeah. Did they get another upgrade today?
Well, they were reiterated outperform.
Reiteration. Okay.
Yeah. So can't fault that chart.
No. What do you make of this action here, Lee? Looks like a little bit of indecision over the last week, huh?
Yeah.
Doji, 3 dojis, current, just kind of all over the place, It's a pretty interesting action at this upper level here.
Well, certainly. Now here on the RSI divergence, it might be something more to watch because you're just at 70 versus the other one, which is well over 70. It might mean either a pullback in here or what it looks like to be doing with your indecision. I think you're right. Maybe there's just a little bit of a sideways time correction here, just a little bit.
I think the level here is clearly the 20-day, Lee. I mean, if you do get any short-term weakness that would bring you down to the 20 or near the 20, I think traders would be a bit more interested in getting along in the neighborhood of the 20-day than maybe up here. The 10-day is still pretty close, I think. Let's see if I can get my cursor to find it. So the 10-day here is at 345. That's only 9 points away. And at least, since it's actually held the 10 pretty darn well. Maybe it's not the 20. Maybe the 10 is what to keep the most eye on here. Man, that 10 has been really great since going back into mid-April, hasn't it?
Yeah. Okay, we've got AMC, the movie chain.
Reopening some theaters.
That's right. Starting July 15th, they will resume their theater operations. So you're getting the reopening trade here. I'm sure the airlines are up, probably the casinos are up, these are up. That is the narrative. The market seems not to care about the virus until it does again.
That's right.
It just doesn't. All right. Let's see. In the industrial Steel Dynamics, STLD.
TLD.
All right. They're up a little bit, though. Looks like to feel more confident as a bull, I think you've got to, get back where we had that island above the 200.
Right there. I think I agree with that.
Yeah. So anyway, the news was they came with a pre-announcement. They see stronger than expected earnings for Q2, and they said their construction-related demand has been steady. which kind of makes sense because we know what's going on with the home builders and a few other things like that. All right, we have Ulta Beauty,
Okay.
ULTA. Let's do the news and then figure out what's going on with that chart. They were upgraded at Barclays to overweight from market weight. Looks like the 50-day moving average is something you might want to keep your eye on there, but you do have resistance at that 200 again then.
Yeah, I think so too. But if you're a trader, been waiting, you've got your opportunity. You're able to put together something here with a stop maybe below this level here, the low on this candle. Low is 214.50, so you are risking about $10. But if you just take a look at your upside opportunity, it could take you back to 258. So you've got a good risk reward opportunity here going, $10 downside and maybe 30 plus to the up. So that's the 1 to 3 that we're often looking for, Lee.
Yeah, and you can see here when we've been talking about the RSI divergences. Well, obviously we've got OBV confirmation, but take that off. Let's just look at the
Sure.
OBV.
I'm
This
sorry,
is
you want to look at OBV or remove OBV?
no remove OBV for right now.
All right.
Okay, so this is kind of your classic divergence where you were basically at 70 on the first high. Then you made a higher high a week later, and the RSI was lower and below 70, and that was a little tip off that maybe you got that pullback. So you can see how this is a little different than those other ones we looked at.
Oh yeah. Yeah, this one has kind of reset itself a little bit, Lee. You could even draw the uptrend line into play here.
Yep.
In addition to the 50 days. So you can use the manual uptrend line. You can use the 50-day, which is doing it for you. But there's enough confluence at this area to at least give you reason to think that it can hold. And that's the concept, if nothing else. If you've been waiting, you're at a spot where if it breaks down and trades below that 214.5, now you have reason to think it can come back and get into this 189, not 190 range. So it's all about knowing those levels and knowing where you want to put your foot, dip your toe in the water, so to speak. Make sure you're using a proper risk strategy.
Yes. All right. Let's take a look at Slack. WRK.
Okay. Yeah, I think they got downgraded, right?
Yeah, Goldman. They actually put a sell on them, which doesn't happen that often.
That was kind of a crazy. Good looking chart too.
Yeah, I mean it's still holding support.
Look at
Not
all that.
yeah. So we tried to fill the gap yesterday, but got thrown back to the bottom of the gap there.
Mm-hmm.
The reason is they say that they're going to have they're having a battle with Microsoft Teams platform for market share.
Mm-hmm.
So they think that they still think the Slack platform is better than Teams at the moment, but it's sometimes hard to fight Microsoft, especially when it's got the Teams within Office 365. So just more competition for them.
Okay. Well, I guess that makes some sense, but a sell rating is pretty
Pretty
aggressive.
aggressive.
Yeah,
Yeah.
exactly what I was thinking. But I'll say
All
that
right.
I will say the action here, Lee, that support line at 30 is pretty strong, it looks like. I mean, look at the number of tests of resistance. You break it out, test the support. I mean, this looks pretty good here. I think a lot of traders would keep a close eye on this, and under 30 would not be as enthused, but if 30 is held, hey, you've got a good range here.
Yeah. So we got a question from Ford. Is there a way to screen on the divergences you mentioned? Not divergence screening is pretty hard. I haven't had a lot of luck doing it on StreetSmart Edge. I do have a couple of divergence scans though that I built on the stock charts because you have a little more flexibility with that. So you can do it. It's just a little more complicated. But I've never been able to do it on the screener on StreetSmart Edge. All right. Um, Let us take a look at Lululemon. Where is that pullback to? Any to 20 maybe?
Hmm. Yep.
Yeah,
Right to it.
right there.
Nice.
Oh,
I mean, RSI was good when they made that last high. Of course, then
yeah.
it dabbled with testing the high, then gave you a much lower RSI on that.
So
But
you
this
are
looks like
getting,
it's worked it off.
yeah, you are getting a nice pullback and test of the 20. Yeah, right. You have your crosshairs. Maybe that's where
Hmm.
you set a stop. Or if you wanted to give it a little bit more breathing room, the low from the beginning of the week. Um, with the
I think
target
I
at the
think
old high.
you almost have to, if your target is the old high, then you almost have to go with the low from yesterday to
Right,
make
to
it
make
work.
the ratio work out.
Yeah,
Yeah.
that way you're risking 6 to make 20. Otherwise, you're back down to here, and that's at 288. Now you're risking, more like 1 to 1.
Yeah. Anyway, the news on them was that they were reiterated outperform at UBS. Also in the oil patch, EOG, an old Adam Johnson favorites.
Mm-hmm.
If you're not familiar, when we used to do live events, uh, one of
That
our,
seems like forever ago, doesn't it?
yeah, back before all this happened, he was one of our most popular third-party guests. He was a former Bloomberg anchor, Princeton economics graduate, and he has a newsletter, Bullseye Brief. We don't recommend any newsletters, but anyway, he's kind of always like this stock. I
Mm-hmm.
don't know if he does now. I haven't talked to him in a while. But anyway, the news here is they were upgraded at SunTrust to buy. So SunTrust put a couple of these oil stocks on buys because they did Occidental too. I think you've got it right there. I think a little good news is we're above the 20 again, which kind of
Mm-hmm.
acted as so maybe zip to that old high perhaps or the 200.
Yeah.
Depends on how much you want to risk. If you use the 20 for real tight stop or give it a little more wiggle room under the 50 and the horizontal support there.
Yeah, the math says that you're at about a 1 to 2 risk versus reward, risking 5 to the 50-day for upside of about 10 to the 200-day. So 1 to 2 isn't terrible. So if that's one you've been watching, the ratio still lines up all right, and the fact that it's above the 20 now, after having had been above the 20 for so long here rather, that's starting to kind of regain its steam, so to speak.
Yeah, I guess that's enough. I have a few more, but let's just do the indices, see what's going on.
You got it. Well, the S&P continues to hang in there. We've got this 20-day now held for 4 days. But the big action is the action above the 200, everything that we've done here and going back to May 26, where we're basically 3+ weeks above the 200. So this is looking okay still. The RSI did come back to the 50 line, which is a level we would expect to retreat to and start to see some buying step in if we were still in the bullish uptrend. So this is all kind of confirming what we have been suspecting a little bit. But I will point out, at least today, notice that we did not take out the high of this week. So if you look here, the high was 31.53 and change. Today's high was 31.55. So we tested it and are currently failing. So let's take a peek at the intra period. See if there's anything else to glean here, Lee. So initially, hot start. We actually opened right at that level, Lee, and have only come lower. So we are basically
Yes.
back into some support here.
Yeah, so there is some support right where you have it.
Mm-hmm.
That's also the 20 period exponential, which many traders look at 5-minute charts. If it takes that out, you'd have to say maybe you go down, you'll start filling the gap then.
Yeah. Yeah, that's a good sized gap, really. 31.11 or 31.18. We're at 31.36. So yeah, we could drop 20 pretty quickly. That would put us back to break even if we were lucky.
Right,
And
but
then pivot.
maybe, yeah, maybe right now we're holding the R2. If it did take out the 20-day exponential, the 20 period exponential there, you'd probably quickly go down to R1, I would say.
Yeah, at least. Yeah. So that'd be a quick 10 points.
Yeah. We got
So
some questions. Let's see, where can you quickly find upgrades and downgrades in the news function? Go to briefing.com. They have upgrades and downgrades in there.
yeah, you can get there just a quick right click everybody in the chart to get the news, and there's briefing right here.
Yeah. That's not where I get them, but you can get them there. Okay.
Let's take a peek at the NASDAQ here. Oh, look at that. We dabbled up here in this upper level, Lee. Makes me a little nervous, especially since we've seen a little bit more weakness here this last half hour. We'll have to see how the morning shakes out, but it's a tricky day to try and gauge trend analysis necessarily. But this is still a bullish uptrend, of course. We just happen to trade at the upper range right now.
Although
It's a breakout.
I will say though, you do have a pretty classic RSI divergence here though.
Yep.
So notice how we're basically at the same level. The RSI is lower by quite a bit, and it's not at overbought levels. So just going on that alone, you would be on the lookout for a pullback.
Yep. At least aware that it could happen. And Lee,
Yeah.
when we talk about it being a pullback, we're not talking about a breakdown. There's a big difference. So a pullback in this case could just be to the 20 SMA, and that's not
Or
huge.
it could be to the high back in February too. Only
Sure.
put that on there. Yeah, right there.
I bet that's coincident with the 10.
Yep.
Pretty darn close.
Yep. So it might just
Feel-
be, it might just be a pullback to the 10.
And that'd feel a
Right
lot
there.
better than the 20. Yeah. Be a couple hundred instead of about 3 plus, instead of 300 plus. So
Yeah.
those transports are dragging a little here today, Lee. Let's check the Russell first.
Mm,
Below the 10, sitting on the 20. Still kind of range bound though here, Lee.
yeah.
I mean, we've been talking about it being in a bit of an uptrend, and it really has been. I can show you here the move. The trend line has been held. But since this, basically, we haven't gone really anywhere, have we?
No.
So might be the 20, but I mean, I'd love to tell you it's got every opportunity to hold the 20, but I think something in this neighborhood from a horizontal support, bring that 50 up here. I wonder if the 50 might be the most important one to eyeball here, Lee. I mean, we're right in the middle of things, so it's kind of difficult to know this spot. But that last fail at the 200 day certainly, at least tells you, hey, it obviously wasn't ready to charge into the prior highs. But we've been talking about the necessity of this group of the Russell being led by energy and financials. So,
Yeah.
getting a
All
little
right.
bit
So
of
let's do a
both.
quick sector check, and we've got to do a screen here.
Yeah. Well, there you go. Your TNX is up a little. XLE up
Everything kind of looks the same though.
Yeah.
Struggling around the 20 really now. Maybe you're going to get a range from the high of, you know, to support to that old high there, maybe.
Hmm.
Let's take a look at the biotech. So they were threatening the yeah, that's good.
Okay. Do that. Well, there's the big boys.
Still trying. They're
Still
still
threatening.
trying. Yeah. And the XBI is still trying.
We should put a line in there.
Yeah. So just watch that one if we break out.
Yeah. XLV finally getting a little bit of a bump here today, but it's still range bound. But you're right, the biotech is the intriguing area of that group. Let's see. So the 10-year is getting a little bit of a bump, and the financials I've got are flat. So we're not really moving on the financials. You're getting a little pull and push here, or with the Russell and its components. XLP is holding up well. I would not have expected Staples to be one of our leaders today if this was a reopen rally necessarily, but they're doing pretty good.
Yeah, we've already looked in materials, kind of outperforming.
We talked about Staples just yesterday, wasn't it, where we did a Staples screen
Yeah.
above the 200. See what tech looks like here. Looks like the NASDAQ.
Yeah.
How about retail? Yeah, similar thing there. If you go to the XRT, you got some upside perhaps.
All right, let's look for retail stocks above the 20-day moving average. We haven't done that in a while.
All right.
So let's go to discretionary, but just focus on retail.
Okay. This give us a chance to use this sector tool a little more. So here you can basically just decide we're going to add them back in. So we want specialty retail, multi-line retail.
Right. And let's also do apparel and luxury goods too, because
Okay.
stores also.
Yeah, footwear, textiles, that's perfect.
Yeah. Okay.
All right, so let's see how this looks. And you said above the 20, so we'll change above the 200 to above the 20-day simple moving average. So we are looking for those in the retail space over 10 a share, trading above their 20 simple moving average with enough volume to enter and exit, and well rated by the Schwab Equity Ratings. We end up with a Friday 13. So let's go ahead and save that as a watch list, and we can load that up. I did see a question about the moving averages, simple moving averages versus exponential. The biggest difference here, everybody, your simples are equal weighting, so it's equally considering every period within the moving average, hence the term simple. The exponential moving averages give a little extra weight to what's going on in the most recent periods. Some traders like the exponentials for shorter term trends or intra-period trends. That's one of the reasons that's on the EMA on your 5-minute chart, for example. But that's generally the breakdown as to why. I would also note that if you're using the EMA for signals, you might get more signals, but they may just be a little less reliable.
Yeah, we got a question on the Russell rebalancing too.
Oh, yeah.
So they've already announced on June 5th what's going to be in them, and they are based on May 8th prices, and the actual rebalancing happens after the market close on June 26th.
Excellent.
Right.
Lee, our first request was for lows.
Okay, hopefully it'll go high, not low.
Well, there you go.
Ooh, there you go.
New
Breakout.
all-time high. Breaking out a little bit.
Yeah.
Likes the 20, doesn't it?
Yep. Where's the 10?
Yeah, 10's been pretty sound too. Boy,
Yeah.
I like this test back here, Lee. These 3 candles in a row.
Yeah, this looks, now again, you're getting a little bit of an RSI divergence, but they don't always work. Or
That's true.
so you got to put that in the back of your mind. But on the other hand, a new high is a new high.
It is.
We've come back a little bit.
Yeah, a little concerning given the the retreat into yesterday's candle here. It's kind of sitting at a pretty important ledge. Notice here the
Yeah.
pivot, we're sitting right on it. So, and if you look at what's gone on in the last couple of days here, this has been a level at which it's been bought up. So it's getting bought up as we speak. Nice little tail there. But that's the level to keep an eye on, I'd say. If you can't hold the pivot, you might very well call into question S1, which is actually a gap ledge too. Notice that. So that's, again, as always, Lee, always about your time frame, isn't it?
Yeah. All right, DG. Well, it's kind of in a range now.
Yeah. Even the moving
182 to, I think on this one you play the breakout of the range it's been in over the last couple of weeks.
Yeah, 10 points, 182 to 192.
Yeah.
Yeah, it's already, you can see it fading into the candle from yesterday at this moment. Big difference in the RSI here, Lee.
Yeah. So I would say it'd be much safer if you want to buy it to wait for the breakout, given all this.
Yeah, that's a good way of saying it. Much safer to wait for the breakout. Could you see it thrown back towards the 50-day or that 182? Sure, but tough to say, obviously. I think the breakout trade is the one that most traders would feel more comfortable with. I would agree with you there.
Okay, Williams Sonoma.
Sure thing.
Our last one here.
You got it. There you go. Now that's what I like to see. Nice test here, Lee.
Yeah.
This looks like a textbook breakout, retest of the breakout ledge.
And this one's not fading. So this one of the ones we've looked at seems to offer the best chance of a long entry.
Yeah, this might be one of those where you have to own just a little and see what happens next. If you get a test that's confirmed along a 20 SMA here, it looks to me like the 20 is about as sound as you're going to find in the short run here, everybody. April 6th, it recaptured its 20, and it has not closed below it since. So if all the charts, Lee, this might be the best looking one that we've seen.
I think so. All right. And with that, we are done. But what is coming up next?
Well, up next, we have Making the Most of Schwab.com. That's with our regional investment strategist, Mark Idam and Robert Kamek. A little later today, we're getting the band back together. Lee and I return at 1 p.m. Eastern for Charting the Markets. So stick around for all we have on deck. Check that calendar, and we will see you all in another segment real soon. Thanks, everybody.
You could think getting commission-free trades